Hi everyone, Reece here from Geelong Real Estate Co. With tax time looming for many of our investment property owners, we thought it was worth jumping on the front foot to see if we could find some helpful tips for you for this time of the year. To that end, we've like to welcome Hugh from BMT Tax Depreciation. Hugh, thanks for coming along, mate.
Oh, thank you very much for having me, Reece.
No worries. Let's just jump straight into it. Hugh, can you just do a rundown on who or what BMT Tax Depreciation are and what services you can offer our investment property owners?
So BMT are a quantity surveying company, and quantity surveyors do many different types of reports for the building industry. But at BMT, we only do depreciation reports. That's what we specialise in. So what we actually do is we estimate the construction costs on any type of property, and we work out how much depreciation the owner is allowed to claim, and we put that into a report and we send it to their accountant. So each year they do the tax return. When they own that investment property, they get to know what deductions they're allowed to claim.
Yeah, fantastic. And am I right in saying that this is sort of best for probably new or near new homes, or even properties that have been renovated that have a lot of new assets in them, or is there something else you can get out of it?
Yeah, we look at both new and old properties. So new properties have a tax depreciation life of 40 years, and older properties still lots of depreciation left in them. And when we actually look back at all the properties we produced last financial year, we found an average deduction for all those properties of just under $10,000 in year one. And when we actually specifically look at those second-hand older properties that were impacted by any legislation, we still found average deductions of $6,200 in the first full financial year, which is great deductions, and just goes to show that older properties can still have lots of deductions left in them.
Yeah, fantastic. Well, that's really good. And just for the viewers at home, what are some of the items that are obviously being accounted for here? Is this like carpet and cooking appliances, or is it just the whole structure? We're talking about the whole shebang?
Yeah, absolutely. We look at both areas of depreciation: the building allowance, the building structure, how much wiring, plumbing, roof tiles, bricks, cement, up, concrete, fencing. And then we also look at the individual fixtures and fittings, and that's actually why we do a site inspection on every property. And we literally can find there's about 150 different types of those properties. Your carpets, your dishwashers are good examples, but we also count up the lights, measure everything, blinds, curtains, that kind of detail we go through on site.
Yeah, right. And you said before, the report that you produce, it's not just a once-off, $10,000 deduction that you're going to get in year one. It lasts for quite a number of years that the owner can keep relying back on.
Yes,
right?
Absolutely. The report is once off, you do it once, but it has all the remaining forward projections. So in a new property, you'd have 40 years for each tax return. You'll know exactly what you're allowed to claim each year, but we do try and cost it out as far out as possible. We look at renovations, extensions, alterations. We actually go and look up the history on the property, so that the current owner can claim some of that, even if they're not the one that paid for it. They're actually allowed to do that. And we look at common areas as well. If there's any common area in the apartment or a unit, they might be entitled to claim some of that as well.
Yeah, awesome. Okay. And is there any other sort of perhaps hot tips we can sort of recommend to some of our owners whilst we're at the moment, whilst we're hitting that tax time?
Yeah, it's a good one just to remind people that if they are doing a renovation, just to let us know. It's also really good to let us know before they start the renovation. And the reason is we may be able to do what's called a scrapping report. And a scrapping report is a BMT term. And it's when we're taking items in a renovation and they're getting thrown out, they've no longer any use or any value. You may be able to claim some of those, the residual value or remaining depreciation in them. And there could be $7,000, $8,000 in deductions. And what we actually do then is we return to the property a second time after the renovation is done, and we cost it all out, put it into the correct area, and allocate a cost to all the items, and that keeps the accountant happy. And we just remind people that if they're doing a renovation, just to give us a call or contact yourselves, and we can follow that up with them.
Yeah, fantastic. So just one last question in relation to that. I've just had an owner, for example, who has had to replace a fully ducted, heating and cooling unit in a house. It was about 12 grand worth of work. So you're saying there's potential that there might be like a scrap value for the old unit if it still had any depreciable lifespan in it, and then also you'd be able to update the report to account for that new item now that's going to then start depreciating in value as well?
Yeah, it's done on a case-by-case basis, so it will depend on the history of the claims already. But definitely we're looking at that new item that's been put in. They can certainly put that into the report or update it or
start accounting.
Yeah, start accounting. They probably wouldn't need BMT to get involved if they have an accountant. If they do the tax return themselves, we do have an online platform that can do that themselves just by updating it that way. But yeah, it's really well worthwhile just asking the question, and we can certainly get an answer to them.
Yeah, fantastic. All right, well, I think that's all we have, guys. I hope that information's been really helpful, and we'll also, when we send out an email with this clip, we'll send a little bit of helpful info in relation to BMT and how you can engage their services. So thanks very much for coming on, mate. It's been good to catch up.
Thanks for having me.
No worries.
Thank you.
Done.